Hi everyone, good morning and welcome to today's morning report with me, Richard Perry, market analyst at Handtech Markets. It is Non-farm Payrolls Friday, and that means generally what we see in front of payrolls is equity markets consolidating, and that is exactly what we have seen this morning. DAX and FTSE basically flat, just slightly lower, just slightly giving up just very small amount of the gains that they saw yesterday. Those gains coming on the back of that ECB press conference, whereby Mario Draghi suggested that the ECB was ready to engage further easing if the indicators suggested, especially inflation, suggested that there was a need to be extended beyond September 2016 for that program, and the markets took that as a big positive in terms of equities. Certainly the DAX flying to an all-time high, FTSE closing at an all-time high as well. Incredible stuff there from the FTSE, although I say that with a hint of irony, because it's been incredibly slow grind higher, with the underperformance of the FTSE continuing. However, the euro has broken down again, and today is continuing really. It was sort of consolidating a little bit earlier on, but now it's beginning to fall back again. It seems to be that even in front of this payrolls data, traders are happy to take a short euro position once more. And that is also helping to drive this dollar index continually higher. It's broken out now for 2 days consecutively, strong gains to the upside, and it continues to move higher. It's trading at the day high at the moment, so the dollar index remains very strong, and that is being reflected in these in some of these currency pairs: euro and also sterling, putting pressure on its key supports as well. So I'll take you through a couple of these charts and also my chart of the day, which is the Aussie today. But what we've got to look out for, as I said, is non-farm payrolls. We've got that is the key bit of data that we've got, 1:30 this afternoon UK time, and the expectation is for a slight slide, actually 240,000 on the payrolls number, slightly back from the 257,000 we had last month. And also the focus will be on the average hourly earnings. Now, average hourly earnings is something that the Fed is definitely looking at. The Fed needs to see hourly earnings improve in order to justify a rate hike. And what we saw last month is a spike growth of 0.5% up on the month, and we're seeing anecdotal evidence of companies raising wages and raising their minimum wage, etc., in the States. So it is beginning to come through, and 0.2% is the expectation on the month. And certainly this payrolls report could be an interesting one, because we've got in 2 weeks' time, we've got the Fed with its meeting, and you've also got the new projections for the forward targets and press conference for Janet Yellen. It's perfectly possible that a strong payrolls report today could drive the changing of the statement, and that keyword patient may well be removed. But we'll see how this payrolls report plays out. But certainly at the moment it looks like the market is taking a strong payrolls report as this euro continues to fall away. So this takes me on to my chart of the day, which is the Aussie dollar. Now, the Aussie dollar is an interesting one, because this consolidation over the past six or so weeks continues really, and it's just dragged it back towards this downtrend again. And we had that move to the downtrend last week. You had a bearish key one-day reversal at that downtrend, so that sort of put the pressure back onto the downside. And it's interesting because I've drawn in here a horizontal line at the RSI around that 50 mark, and every time it gets towards 50 it falls away. And it's just below that now, so you'd say that the momentum is still negative. You're still not really suggesting that this downtrend is going to be broken, and that downtrend now comes in below. Today that downtrend comes in around 78.40, I think it is, but it's below, interestingly, this key pivot level at 78.50, which I can show you here on the hourly chart. If I get a proper chart up, here we go. Here's that 78.50 level on the hourly chart, which was a key, or has been a key pivot level on this Aussie dollar chart, and something certainly a level you need to be watching. Hit again 2 days ago and backed away, and what we're seeing is the Aussie dollar just sort of now positioning itself lower, and I think that it's trading around this 78 big figure mark, and I see 78 big figure as a bit of a near-term pivot level again. We had that rally overnight, and that's back towards that 78 figure level, and it's falling away. That was sort of an old support becomes new resistance, so that could be now a little bit of a line in the sand for this near-term outlook. If you start to see the Aussie trading consistently above 78 figure, then maybe you'd be sort of more positive, but at the moment I'm taking it that this is just a bit of a bear rally within the range, these momentum indicators on the hourly chart also sort of moving towards more of a bearish configuration. You saw the RSI yesterday back well below 30, whereas the highs are coming in the 60s generally when you get the rallies now over the past couple of weeks. And again today, that peak coming up around 60 on the RSI, and as the resistance starts to come in. MACD lines in negative configuration on the hourly, beginning to roll over just around that neutral point, and the stochastics as well already up and looking a little bit extended. So it looks like, in my opinion, that 78 figure could be an area of resistance, or certainly as a near-term pivot level. But I think we're going to be positioning for a test, bearing in mind the medium-term outlook, or that's a six-month downtrend, in fact, on the Aussie. Bearing in mind that comes in below that 78.50 level, so the general mood is for negativity still, I think, within this Aussie chart, and I think we're going to get a retest of the 77.40 level, and subsequently we could see further downside on this chart. So it certainly looks like that 77.40 level is the key near-term support, and if that breaks down, you could be back at the lows again at around 76.40. So that is a key level to watch out for during payrolls, as a strong payrolls report could well put pressure on that support. So watch out for that today. But in the meantime, I wish you good luck in your trading, and I'll speak to you later. Thank you.